Powering the Tech-Driven Future, an event by Fencore in collaboration with the Institute of Sovereign Investors. My name is Thomas Akram. I'm the Managing Director for EMEA for Fencore. Our agenda: a brief introduction to the roundtable and today's themes, a presentation of our guest speakers, followed by a discussion and questions from the audience. We will be running a couple of polls in parallel, and there will be a short presentation of Fencore and the Institute of Sovereign Investors at the end of the presentation and at the end of the webinar. We have more than 100 attendees today across the two sessions. This is the second one. So thank you very much for taking the time to engage and be part of the debate. Today we will focus on target operating models, past, present, and future of sovereign wealth funds, how they are organized in terms of investments, operation, governance, processes, data systems, and structures, including partnerships and outsourcing. We have sovereign wealth funds with us who have been in the business for more than 50 years, and we have representatives and consultants working with sovereign wealth funds that are yet to be launched. And of course, the sovereign wealth fund ecosystem extends to asset managers managing assets on their behalf, asset owners who co-invest with sovereign wealth funds, and technology and consulting partners who are crucial for facilitating and managing change and transformation. So we look forward to a conversation on market trends, opportunities, and challenges, and how the technology is driving or enabling this change, transformation, and constant improvement of target operating models. The webinar will be recorded, and we will also distribute the slides and make a white paper based on the conversations. We will also address any questions that we do not have time to address as part of the webinar, or something that we might be able to look into and would require more time for reflection. A quick introduction to Fencore. We are a modern cloud-native, AI-enabled data management solution for asset managers and asset owners of all shapes and sizes across all asset classes and public and private markets. We handle structured as well as unstructured data. And we believe that data is an essential component for the modern target operating model. A data-centric operating model for us represents a foundation for a more agile way of running your business, as it gives you the ability to develop your operation, your business, your investments, and also to swap up components of your target operating model where that specific area, functional system, is no longer fit for purpose. This is our third webinar. Earlier this year, we have previously covered AI specifically, as well as hosting a webinar on buy versus build versus outsource considerations, all three from a target operating model perspective. I will move on to the introduction of the guest speakers and let them introduce themselves, starting with myself, Thomas Akram, Managing Director for Fencore. This is my 30th year in financial technology, including 20 plus years as Head of Services, UK, Ireland, and Middle East for SimCorp, 6 years in consulting in various global consulting roles, before returning to software with Fencore in 2023. Christian, would you go next, please?
Good afternoon, everybody. I'm Christian Fluharden. I have 3 decades of CIO experience, 3 central banks and 1 mutual fund. I had the opportunity to work both with ECB, IMF, and setting up the International Forum of Sovereign Wealth Fund, where I became the first Secretary General. Today, I'm basically running the Institute of Sovereign Investors, where I'm the CEO. And we are 90 great people who know a lot about sovereign wealth and monitoring the space as we speak.
Thank you, Christian.
I'll go next. Thanks, Thomas. Thanks, Christian. Bruce Russell. I'm a senior partner from Alpha FMC. I lead our asset owner segment globally. We help organizations with their operating model, data and technology strategies, and I've been fortunate enough to, over the last 20 plus years, work with many leading sovereign funds on their data and technology transformation, particularly some of those funds that are moving away from a sort of traditional asset class-based investing model to TPA. So really happy to join the conversation today.
Thank you, Bruce. Kashif?
Thank you, Thomas. Good afternoon, good morning, everyone. My name is Kashif Khalid. I currently am the head of Middle East and Africa for Northern Trust, where I've been with the bank for just under a couple of years. And I've spent a good number of years at Fencore running Middle East and Africa as well. Worked a lot on Thomas, but also alongside many asset owners and asset managers, predominantly in the sovereign space. Thank you for having me.
Thank you. Daniel, finally, you.
Good afternoon, everybody. My name is Daniel Reimer. I used to be a senior advisor for the Norwegian sovereign wealth fund, NBIM. That is the world's largest sovereign wealth fund, $2 trillion US. Subsequent to that, I've consulted for a number of sovereign wealth funds, both in the Middle East, Africa, and Southeast Asia. Thank you very much.
Thanks, Daniel. We will move on to the discussion. And the first question we have, and if I could ask you, Bruce, to go first on this one. What does sovereign leadership look like in a world where technology is no longer a support function, but a strategic differentiator for national wealth?
Thanks, Thomas. You started with a really good question, actually, and I had to think hard about answering that one. I think the first thing is to define what does sovereign leadership actually mean, because sovereign funds have different purposes. Some sovereign funds in markets really just act like an investor. They are simply there to maximize the risk-adjusted return for their constituents. And so I think they would think about technology in any way that an active investor would think about it. How do I manage the risk in my portfolio? How do I manage disruption? And how do I exploit opportunities? I mentioned TPA. I think what's really interesting about TPA is that you're not bound by an asset class construct. You can really think about technology across different dimensions and different factors. So it could be, I have a thematic around data centers, and that talks to real estate, talks to technology, it talks to a number of different things. And so I think sovereign funds in that construct need to think about how do I sort of seize the disruption that's happening with technology in a way that's going to maximize my return. There's another class of sovereign funds, though, that have a dual purpose, and that is to not only invest, but also to develop effectively the industry for the entity that they represent. And that's particularly in developing markets. And so I think it's going to be a really interesting decision around those sovereign funds. Do they allocate capital to foster local expertise around technology? So, for example, at the moment, we're beholden to two types of scenarios for large language models. You can either go to the Chinese or you can go to the US. So if I'm sitting in a non-aligned country, and I'm a sovereign investor, do I use capital to foster a third choice around AI? So I think that's a really interesting decision that's going to be faced by these organizations in the near term.
Thank you, Bruce. Kashif, would you share your views, please?
I think just dwelling a bit more further on what Bruce was saying. I mean, sovereign investors in general, they're looking after long-term economic growth for their people, for their nations, to grow and protect capital for future generations. And no two sovereigns are necessarily the same, right? They come from different places. Some have had transformational journeys, some have been evolutionary. It also depends on what resources they have to hand. But from a technology angle, I see it in three different ways. The first is investment into technology, where they're active shareholders. and they can be big shareholders, and they can influence decisions within technology and look for returns. And as part of that, sitting where I am in the Middle East, I've seen the attraction of investment into jurisdictions where they're setting up data centers, AI data centers, and that creates jobs, that creates brings SMEs and drives productivity. The second, and then that's the first element. The second is homegrown value creation. Again, if I look around me in the Middle East, companies being set up in the AI space to a point where they're trying to innovate as well. And at some point, I wouldn't be surprised if they export innovation to the rest of the world. And the last is adoption, is how along that journey of adopting technology, how they can bring it in to become more productive. So with any economy, you have limited resources, whether that's capital or people, but technology is one that you can apply to both. So using technology, using AI to find those gains within the jurisdictions, within the economies to grow. And that's where I'm seeing it becoming a differentiator for national wealth and protection of it.
Thank you, Kostef. Christian, given your background across so many different sovereign wealth funds, what are your thoughts on this matter?
Very importantly, it starts from the top. And it's obviously it's one of the most important board discussions around the world. The board basically needs to see AI and needs to see technology as a strategic asset on par with their capital allocation. This asset they need to make sure is implemented in the organization, and they should think about how to redesign most of the organization around technology. We think that it's important to study their resilience response, which means that by the end of the day, they're still responsible for whatever happened with technology, whatever happened with AI. It is the top management that is the final decision maker, and also the final responsibility for anything that goes on in the organization. You also notice like countries like Singapore put this in legislation and say that is the CEO's responsibility, it is the board's responsibility, whatever AI or technology did in the organization. Therefore, a resilience discussion is the key one to have. Focus on governance, have smart people leading at the top, have that delegated out throughout your system, and put in perhaps a consideration like our friends in Norway did about responsible AI, because what does it actually mean that you have somebody formulating a lot of the decision-making background papers in your organization? Be clear about that and lead from top. So set standards, lead high governance, high resilience focus. I'll leave it at that at this stage.
Daniel, what are your thoughts?
These are the three things that I think about when I think about sovereignty. First of all, analytical sovereignty, which is all around owning the models and pipelines, not just consuming vendor data. Secondly, operational sovereignty, which is around executing at scale. For example, at the Norwegian Sovereign Wealth Fund AI trading program, cut nearly $500 million in terms of cost between 2020 and 2025. And lastly, strategic sovereignty, which is around staying free of legacy lock-ins so you can adopt as the landscape shifts. So those are the three things that I really think about when I think about sovereignty.
Very good. Let's move on to the next question. So Daniel, I would like to stay with you in terms of how should sovereign investors redefine their operating model to stay influential in a global economy shaped by data concentration, AI acceleration, and geopolitical fragmentation?
Sure. Thanks for that question, Thomas. And it's hugely relevant. Data concentration is obviously something that you really need to have top of mind. And if, again, I'm drawing back to the Norwegian experience. So at MBIM, earned a roughly $150 billion US, that is $150 billion US, just from the 7 largest US tech firms over 5 years in terms of returns. But owning equity doesn't mean you have access to their data. You're ultimately just a shareholder. You're not a partner. So what should your response be in terms of data concentration? You should build your advantages where your positions give you access that they don't have. You need to have ownership of your data. You need direct company engagement to generate your own data, and you need private market intelligence. AI acceleration, already mentioned some savings that AI generated at MBIM. I'll mention another one. For example, it was estimated that just in a year, the adoption or early adoption of ChatGPT resulted in 200,000 staff hours saved. NBIM has real-time AI-powered ESG screening, so every company that is included in the portfolio will be automatically screened by Anthropic's Claude. This doesn't happen by accident. It requires infrastructure, governance, and a culture built in advance. Lastly, geographical fragmentation. So where you put your cloud matters, what AI tools you matters. These things are geopolitical. 3 imperatives to follow is build deep, not broad, design for interoperability, and silos will be a structural disadvantage that you really want to avoid. Thanks.
Thank you. Christian, what would you like to add to the conversation?
Well, I'll support my Norwegian friends. What we're talking about, we term operational alpha, which means that you try to trim through your entire organization and see how can you basically use AI and technology in a smarter way to do what you used to do before. In that way, we hope that you can turn what used to be 80% of your day into 20% of your day, and we do the 80-20 the other way around. So we augment staff, we augment value creation, we augment decision making within the organization. We are discussing, I thought it was a nice acronym, that I think we are adding the AQ to the EQ and IQ. Let me explain. AQ would be your adaptation quotient, which is what is needed expertise to be able to apply new technology in the organization. Obviously, we have hired a lot of great people around the world because they have a smart IQ. We put them to work with other people and hope that it goes very well and they produce great stuff as teams. That's the EQ. But the new kid on the block is the AQ to me. The ability to outsource whatever you can outsource, the ability to disrupt yourself when you go to work, the ability to think about how to minimize trivial jobs that I may have been doing throughout my life. Once you have done that, you go and tell your boss, look at me, I now have 80% more time in my day. Can I get something more interesting to do? And I have never yet met a boss who says, no, we have nothing better to do than this. They will give you more challenging tasks and more interesting jobs. And that's how you augment the organization from the bottom up, if you think about it.
Kashif, what are your reflections, especially focusing on the Middle East and the success of the sovereign wealth funds of the region?
I think for sovereign investors in general, it's their operating model is very based on the outcomes they're seeking, the investment philosophy they have, but also the risk appetite they have. And that leads them to whether they're going to outsource versus insourcing and anything in between. And to use an apt analogy from the Middle East, I mean, data, if you look at data, it's like the oil of today, and AI, I term it as a refinery. And what do I mean by that? You know, crude oil, if you take it out of the ground, it's not worth much. You've got to treat it, you've got to refine it, and it depends on where you take it out from, right? So Middle Eastern oil is known to be quite rich. South, Venezuelan oil, for example, takes a bit more refinery efforts. So it's also about how you source your data, shape it, collect it, have governance around it, and most importantly, how you infer from it. So of course, investors in general are looking for outcomes, insights from the data. It's how you treat it in a way where you can find those inferences and make decisions off the back of it. And AI helps to accelerate that. I mean, not too long ago, it would take us a lifetime on a simple CPU to do calculations that AI does today. But now with the GPUs, and we haven't even gone to quantum computing, which is the next phase, right? But I think it's quite important to bring all those things together in your operating model. And more importantly, it's also, or equally importantly, at least, it's technology data, but the people. So keeping up with the pace, having your workforce. If you may have a great workforce, but not a great tech stack, or you may have a great tech stack, but not a great workforce. So you've got to find the right sort of balance to have an operating that model that allows you to pivot, allows you to be agile, allows you to exploit opportunities in the market. The markets respond very quickly, very rapidly, as we know in today's times, because we've got so many different signals that come from, whether it's from the markets, whether it's from social media or anything in between. So having an operating model for investors in general that can exploit opportunities, whilst at the same time also predict and control their costs is something that's would be seen as something that's really optimal for investors in general?
No, it's a good answer, and I fully concur. The good old days for the target operating model was basically a one-dimensional world of choosing what to do in your front office and the back office, maybe with a flavor of traditional outsourcing, has all gone. It's a multi-dimensional model that includes your systems, your data, your competences, component-based centers of excellence and outsourcing. So it's a very interesting new way of looking at this, and my conversations continue at the pace that we see today. Bruce, what are your thoughts on this matter?
Yeah, I really wanted to agree with my fellow panelists. I mean, I think the pace of change is so quick, right? So you've got to think about that in two ways. Number one, as an investor, I need to be able to be an opportunistic investor. I need to be able to seize on new things quickly. I need to be able to assess them, and I need to be able to take advantage of those things. But in terms of how the funds operate, someone told me, I use the term AI is like a toddler with superpowers, right? And it's such a new thing. And I think it's really important that funds really point AI at the core of what they do. They are an investor. How does AI help me through my investment life cycle? Because you can get distracted easily. You know, better email drafting or other things, that's kind of interesting, but it's not going to move the needle. And so I think setting up AI governance in a way that really looks at what do we do, how do we invest, and how do we add value, where is AI going to contribute to that, is super important. And that's what we're seeing with some of the leading funds. It means some people in the organization are going to be disappointed because maybe they won't get the email drafting tool that they wanted. But at the end of the day, I think ruthless prioritization around where you point technology, particularly AI, is going to be super, super important.
Just a quick follow-up questions to you regarding that, having read your white paper on AI that you made for the Australian sovereign wealth fund. Do you see any difference between AI governance and traditional technological governance?
100%. Because AI is slightly controversial. I don't think of AI as a technology per se. I think of AI almost as a new capability. You can almost think of it as a virtual workforce, right? So I think the way you govern AI is a different construct. I think in some cases, you may decide to do things that are what would have been considered a bad choice under traditional technology architecture. So a good example is buy versus build. I think the build in technology actually comes back in under AI. It doesn't mean that you build a data management system or an order management system, but I do think AI governance needs to think about where should I actually deploy my own internal development capability where it's going to help solve for the last mile of investing. So I think it would be dangerous to simply try and rope AI into existing technology governance, because I think it's a very different sort of framework that you need.
Very good. Let's move on to the third one. But before we do that, just a reminder that we are running a couple of polls in parallel. Please remember to vote. We will not go through the results from the polls. I think we've decided to digest the results a little bit, and also to merge them from the previous session where we had predominantly APAC and Australia, to see if there are any differences, and we would like a bit of time to reflect on that one. But please answer them and keep those questions coming. We'll address a handful of those, all depending on how much time we have available after the last questions and the presentations. So this one, of course, is different from the different sovereign wealth funds. As I mentioned, we have sovereign wealth funds who have been around for half a century, and then we have some who are just about to be launched. But the question is, and Kristen, I would like you to start with this one, if you don't mind. If you could redesign your organization from scratch for the next 20 years, what role would technology play at the center of that vision?
Well, the short answer is it would be at the top, basically. As we speak, there are about 15 to 20 sovereign wealth funds being considered or established in some ways. They should be mindful that there's a lot of good experience out there. They should study Santiago principles. They should learn from the peers. They should talk with us at the Institute. And then they should think about what opportunities this new technology gives. So imagine how fantastic it is that you can actually start with AI. You can build the whole organization with the perfect technology. I think most of us who have worked for 30 years understand that if you build everything, you end up with 30 different systems, and you have to fit them together in some way at the end of it. And that's the biggest exercise that the organization had. Imagine now just having one core system or a few systems that basically allow you to access all the relevant data, run all your various routines like the strategic asset allocation, figuring out the risk-adjusted return on the various investment opportunities, knowing instantly what the external managers are doing with your money, while you are comparing that to what your internal teams are currently looking into. Imagine how different that world can be if you're allowed to start from scratch. So if you're new, what an opportunity. If you already have a sovereign wealth fund since 50, 60 years, why not do exactly the same? You can run in parallel a sandbox in the organization where you study, if we were permitted to start afresh, what would we do? And how we construct it, and then gradually you move those findings when you have tested and you are happy with it, you move it into your existing structure. That way you're augmenting your own organization with AI and technology, and you're teaching your staff in the process. And this is the adaptation quotient that we were talking about, that brings out the operational alpha, to have fun with two new terms, if you will. But a huge opportunity.
No, I absolutely, completely agree, and very interesting. Of course, one of the challenges is that depending on the level you have of technical debt and legacy, that transformation can take time, and starting fresh is a bit of a luxury if you are in that situation. Daniel, you have worked with both very established and emerging sovereign wealth funds. What do you think about this?
Well, happy to share some thoughts about redesigning from scratch. First of all, the biggest constraint on modernizing a sovereign wealth fund is never technology budget, is in the end change management. Let me share a quote from the Norwegian sovereign wealth fund CEO, Nicolai Tangen, in a AI town hall, where he said, "The ship is sailing, get on board or find a new place to work." Very clear tone from the top. There are a few principles, obviously, around redesigning from scratch, which really applies to any organization, not specifically to a sovereign wealth fund, which is, to start with data architecture before you do a single investment policy. You want to design for AI native, not augmented processes. Something that is somewhat unique to Norway. Norway has been rated really high in terms of transparency. I believe only Canada has beat us in terms of that score. At NBIM, the Norwegian Sovereign Wealth Fund, the public mandates might sometimes feel constrained, but technology has really allowed us to create auditable decision trails, publicly accessible voting records, and ESG positions that citizens can understand. That really creates organizational trust, which is so important when you run a sovereign wealth fund. But one thing is redesigning. The other thing is, what would I keep? I believe that the long horizon and the ethical foundation is super important to keep. As AI expands what is technically possible, the temptation to do things differently and more efficient, but indefensible, may grow. The fund's trust nationally is super important. So I think that the next 20 years will not be won by the fund with the best algorithms, but by the fund that best understands the relationship between human judgment and the machine capability, and builds an organization around both. Thanks.
Thank you. Very good. Kashif, a couple of questions on this one. I'm putting you on the spot a little bit, but I would be very interesting to hear your view in terms of the Middle East and the new structures around the sovereign wealth funds of the region, where you have some very established structures, and they are now being redefined to be ready for an unwritten future.
It's a great question. I mean, what we're seeing in the Middle East is either a collection of pool of different sort of wealth or distribution of it, and it really comes down to where these economies are in terms of diversifying them. We know the Middle East has been heavily reliant on an oil-based economy. Some countries over here have a break-even oil price of $90 a barrel. Some have $40 a barrel. So it differs quite drastically between. So you've got some who are heavily reliant on finding new ways to diversify. What becomes quite interesting is as new sovereign wealth funds are set up, or some are or collecting more or aggregating more, it's always what's interesting is the acceptance of change. And as the famous saying goes is that culture eats strategy for lunch. And whatever you put in needs to be able to. You need to have a workforce that is able to operate around it, understand it, keep up with the pace, and accept it. If I was to look at building a new sort of organization, I want to make sure it's fit for the future. What I mean by that is, today we're talking about AI, tomorrow it'll be quantum computing, something else will come. And whatever we set up, we need to be able to be agile enough as an organization to be able to adapt and move with that current trend, and to be able to extract value from what's on the table. And I don't just mean the operational alpha, I also mean investment alpha. I mean, you're seeing a lot of firms working on AI, using AI to do quantum investing. And that's another angle that's becomes very interesting. What I would also say is, we know technology is the enabler. What we don't want to end up with is it owning us as opposed to us owning it. Because there is that fine line where you rely heavily on technology where it could drive you to places where you may not want to be. So I think overall, whatever you would build out for the next 20 years, you need to ensure you still have control over how it moves, how you influence it, how you innovate, and not the opposite.
Bruce, your perspective, very interesting if you cover the geographies we haven't touched on. I know you're a native Australian, but you have reallocated to the US, and I'm sure you'll be working with a lot of the government-backed Canadian investors and the emerging Canadian sovereign wealth fund as well. So let me have your views and thoughts on this subject.
Yeah, I think it's a really exciting time, and I want to echo the thought how fortunate you could be if you were able to have a green field. And I think part of the challenge with sovereign funds, many of them, is they've got legacy technology, legacy processes, and so the ability to change is more difficult. I wanted to pick up, though, on something that Kashif sort of left with, which is, I think we need to be important that technology doesn't lead the solution. Technology should respond to the requirement. I've seen plenty of war stories of technology solutions looking for problems, particularly in the data space. And so I would always come back to my investing process and what am I trying to solve for. But there are two themes that jump out from me that I think are super interesting. Number one is the biggest constraint I believe that sovereign funds typically face is access to skills and talent. They're in quite often remote geographies. For example, you could have New Zealand Super, who are in Auckland, which is a long way away from major financial centres, or someone like Future Fund that is subject to a headcount cap by the government. And so I think AI particularly unlocks that constraint. And so we should think about our operating model around, we can do a lot more as an organisation. And I think that's super, super exciting. The second point I would make is re-prosecute how things are done. I don't think using AI and technology to just be more efficient and smarter on the way we operate today is the right way to think about it. Come back to the objective. What am I trying to achieve? And if I bring that back to data, I think we can change massively the way that data is managed inside the organisation, because at the moment it tends to be lots of effort around reconciliations and operational processes. And quite often, again, the data becomes a solution looking for a problem. We can flip that. We can actually make it a lot more demand-based so that we're actually meeting the needs of the investment teams themselves. So I think there are two themes that I'm really excited about over the next few years. We hosted an AI roundtable in Canada a couple of weeks ago with some leading funds, and that was certainly the theme that they were also mentioning in terms of what they see over the next, I think 20 years is a long time. I reckon you could change that and call it the next 5 years, because I think that's going to be there's going to be a lot of transformation coming.
Thank you, Bruce. So we've received a lot of questions. I will pick, in the interest of time, I will just pick a couple of these. There are a lot of good ones. I will just throw it out to the panel, and please jump in and see what you think. They're all very interesting. I'll start at the very top. Will today's geopolitical volatility accelerate the move towards alternative investments, or vice versa? Kashif, can I tempt you to take that one?
Sure. So if I correctly understood, the question was, with the political volatility we have, is there going to be a pivot more towards alternative investments? Is that right?
Yes.
I think there's a pivot towards alternative investments in general.
Yeah.
Historically, you used to have those portfolios that had private markets was typically a sleeve at the end of it. Now with, as Bruce spoke about TPA and different ways for funds to find value, seeing a lot more push towards private markets, and it also depends on your investment horizon. Sovereign wealth funds are very much so for long-term investors, and at least from the Middle East perspective, there's a continued allocation towards private markets, and that's irrespective of the political volatility.
And I think it's a very difficult question, because alternative investments have been regarded as more stable in terms of the annualized return, but sovereign wealth funds usually have a very long investment horizon. At the same time, you are lacking the transparency and the liquidity of your investments. So I don't think we can answer this one today, but it would probably be a subject that we could discuss separately in a different forum. So a difficult one, but we'll start with that one. We'll take another one. So maybe this one for you, Christian, in terms of both what you have said today, but also the previous work that I've seen the Institute have done on AI. Where does AI go wrong for wealth funds and other donors? So this one comes from one of the attendees who are more skeptical to new technology and AI in adoption.
It's a fantastic question, and it goes wrong in many ways, is the short answer, right? Keep in mind that it's your responsibility, whatever is put into the report that was made to make a decision. Study Singapore. I think they signed up a Veritas program where they verify the quality of all the work coming out of the various institutions. Study Norway, where you put in an ethical AI policy that makes sure that you understand that this is something that is a very, very good word processor, throwing a lot of nice words in a mathematically orderly fashion at you. And it looks like intelligence, but you still need to read it. You still need to own it. So we all know AI can hallucinate. You need to have more models. You may want to test different models against each other for an output. It will take whatever data you throw at it. So garbage in, garbage out problems, if you will. You can have something that looks like a sure fact, which is a very contestable fact. So everything we do when we go to work, we should do still, but in a structured way where we don't perhaps need to do all the nitty-gritty, but we need certainly to own the output. And that is where AI will typically go wrong. It will come out with something that looks great, but maybe the wrong output. It's our problem if it is.
Good. I think we only have time for one more, so I believe this one is for you, Daniel. You've already touched on it on a few occasions. How should the operating model evolve to balance financial returns with national strategic objectives?
Well, the Norwegian Sovereign Wealth Fund is very much operating as with a very constrained mandate. So it is pretty much passive investor with 70% public equities, 27% listed fixed income instruments, and then the remaining 3% in some real estate and in renewable energy assets. So there is a discussion around alternative investments. So the fund has recommended it to be permitted to invest into non-listed instruments such as private equity. And the argument that the fund and the CEO has made is that there's a lot of value creation that you miss by not being exposed to that. The owner, which is the Ministry of Finance and the Parliament, has not approved that. And their counter arguments are really around transparency, price transparency, performance transparency of those investments that we know are there could be issues with, and also costs, basically. So costs, absolute cost of running the fund is a national objective. So those are some considerations.
Thank
Let
you.
me take a quick compliment or supplement that answer. One mandate for one objective, and one fund for one objective for one mandate. So the more mandates you put into the same fund, the more impossible it becomes to figure out whether you're doing well. So you may want to segregate those mandates if you have more than one. Is it return? Is it the strategic objective? Is it the diversification of your country? Are you trying to attract other people's money and co-invest? Figure out what that is and simply put them in different structures. You may have same managers doing many different things, but they should have clarity on mandates. That's the strongest advice we can give.
Very good. In the interest of time, 1 minute each. Closing remarks, starting with you, Bruce.
Look, I think we've covered a lot of ground. I think my closing remarks are twofold. Number one is focus. There's lots of excitement, but focus on what really matters, and particularly that is around investing and where can I focus my technology really to improve that, right? You can easily get distracted. And number two, don't be a solution looking for a problem. Understand your investment process, understand how you generate alpha. If you're moving towards TPA, what does that look like? Because people do TPA in different ways. And that is so, so important, because we've seen over-engineered solutions as much as under-engineered solutions. So that's my final thoughts.
Thank you. Kashif?
I'd say it's really important to choose the right partners in this journey. At the end of the day, you want to find partners as a sovereign investor where you're not effectively talking to an AI or tech bot at the other end to solve your problems sometimes. And so having a partner that has your back and you have their back is really important in this journey.
Thanks. Daniel?
I think if you haven't deployed AI tools to your biggest problems or your biggest opportunities, you're leaving money on the table. There are a lot of public information, particularly from NBIM, how that has been deployed and quite successfully. So that's one thing. I talked about the three elements of sovereignty. So you obviously have to balance that and make sure that in the end, fundamentally, sovereignty is about you as the fund manager being in the driving seat, not being led by technology or legacy systems.
And Christian, the final words?
Well, I'll have fun with my new best friend in acronyms. So go and build some AQ in your organization. Norwegians say it in a different way. If the ship is sailing, do you want to get on board or find something else to do? This is going to be the objective for many motivational working groups within the different organizations. You have smart IQ. You probably have worked with HR on EQ for many years. This is the time of AQ. I'll leave it at that.
Thank you, Christian. Just a few words on Fencore and what we do. So we are, as I mentioned, a data management only for the investment management community, asset managers and asset owners of all shapes, sizes, all asset classes, private markets, and structured and unstructured data. Built on modern technology, we believe that having a data-centric and a data operating model at the core gives you the agility for an unwritten future. If you need to change your organization, change your investment universe, and swap out systems that come to the end of its life cycle. Sovereign wealth funds are regarded as some of the more conservative operational organizations in the world. But I think that what we have seen today, what we have heard today, the interest and the engagement so far is that things are changing in general. You cannot stand still, you have to evolve, and we believe that data is at the very core of that. So we would very much like to hear from you. The way we engage is that we look into specific scenarios, we look into future strategy, and then we let you try out a few things free. We don't have all the answers, but we can help you to dive into the problems and the challenges and the opportunities of a data-centric world. I will finally move on to the Institute of Sovereign Investors presentation, so bear with me for a few seconds.
Before we say goodbye to everybody at the Institute, we took our own medicine. So this is how 2 publications are presented in 3 minutes by AI.
Institutional Investment Management. I'm Christian Flivholm, CEO of...
It sounds like we got a few problems in this one, so...
You can say it did work this morning, so...
Yeah. Good. I'll stop this. I'll stop this recording of it. It did work this morning, but you know, as they say with even the target operating models, just because it works today doesn't mean it's going to work tomorrow.
Right.
Maybe Christian, you could give us, although you are a real person.
You'll get the HI version of this instead. So basically, with the Institute of Sovereign Investors, we are 90 people working together. The Institute consists of a lot of former and current sovereign executives around the world. We are joined by about 30 academics as well, and we try to think from a practitioner's perspective about the major problems being addressed by sovereign investors around the world. The video sits also on LinkedIn, so you can see it there. You can then see 2 publications which are summarizing what we did on AI. The first one, we look at the internal side of the organization and figured out all the various aspects in the organization that can be improved by AI. And then the second publication we did in March basically focused on what does it mean for your external fund management and how do you choose external fund managers. And the bottom line is you basically need to be able to deal with external fund managers who have full capability of AI, and you should integrate it as much as you can yourself. This become a no-brainer in due diligence to ask those type of questions going forward. Do have a look at our website, sovereign-investors.com, and I will leave the presentation at that.
Thank you very much, and thank you to everyone who participated, engaged, and dialed in for the occasion. We will share the slides. That includes all the contact details of the guest speakers, as well as the link to Kristen's video. I've already watched it a few times. It is something that requires a bit of repetitive viewing, I think. There's a lot of information, there's a lot of food for thought, and both Christian, myself, and Alpha FMC have a number of different supplementary and complementary white papers, not only on AI, but target operating model, market trends, sovereign investments, asset allocation, and other subjects that could be relevant. Please get back to us and let me know if you want to continue the conversation further. Let us know what you think about the webinar, the format, the subjects, and anything that can be improved if we do decide to do something similar in the future. But on that note, thank you very much, and we hope to see you all soon. Thank you.
Thank you. Bye-bye.